What is going on, everybody? Hopefully, guys are doing well out there. It is time for the Semi-Stock Show here on Equity Empire. Guys, we had a gigantic week for the semiconductor industry. I tweeted this out actually on Thursday, so a lot of these numbers got even worse, but the vast majority of stocks that we're covering are deep into correction mode, starting with NVIDIA, Qualcomm, ARM Holdings, Intel's even deeper in a hole as you saw their earnings drop. Super Micro Computer reports earnings this week. AMD reported this past week. On today's show, we'll go over some of the earnings that we had last week. We'll take a look at a new one, Lam Research, a small semiconductor company. One thing that we're going to be talking about on today's show is this the end? Is this performance that we're seeing with the semiconductor stocks, is this correction going to turn into a bear market? And is that bear market going to last? Or is this just kind of a garden variety pullback on these stocks' journey to even higher highs, higher profits? We'll have to talk about that. And if that's the case, there's certainly some smaller semiconductor stocks that will rally incredibly hard if this big group of semiconductor giants, if they rally as well. We'll talk about one of those companies as they reported earnings. Qualcomm reported earnings. We'll go over those. ARM Holdings reported earnings as well, and then we'll come over and look at these stock charts, which again have pulled off 20% from the highs, which is technically a bear market. And then, but when you do look at these in context of the rally that we've been on really since late 2022, well, it's just looking like to me maybe potentially just a garden variety pullback. We'll try to answer those questions on today's show, but we had gigantic news out of NVIDIA this weekend. This actually crossed just this weekend. NVIDIA started the week at about $216 per share, down 7.5% to finish the week at 107.27. But you did not get good news from NVIDIA over the weekend as their new AI chip is being delayed potentially into next year. This is not good. This is Intel-like. This is other semiconductor companies. What we typically see in the semiconductor industry is these companies get out and ahead. And that is what spurred NVIDIA's stock growth really over the past year, 2 years or so, is the fact that they were so far out in front when it came to accelerated data center GPUs. I mean, they were way out in front of everybody outside of the custom silicon that maybe Google was making. And so NVIDIA had this huge tailwind in terms of demand and in terms of its sales, but their Blackwell platform, which was supposed to release later this year, looks like it's getting delayed due to design flaws into next year. And it brings into question a couple of things. Number one, who does this benefit? Because we're going to have a several month period of time frame where these tech giants are not going to be able to maybe get the high-end GPUs from NVIDIA. Now, their previous generation certainly will continue to be sold and probably continue to be sold in high numbers, but who does this benefit? And number two, as it relates to NVIDIA, what happens if the delay gets even deeper? Because we've seen this in the semiconductor industry where something gets promised at a certain time and then it gets delayed. And what would be devastating, absolutely devastating for NVIDIA, is if these get delayed even more. So we're looking for kind of a first quarter release. Obviously, when this company reports their earnings, we're probably about 3 weeks away still on NVIDIA earnings. When they report their earnings, they're going to get a lot of questions on how confident they are about delivering this Blackwell chip in the first quarter of next year when it was expected really in the fourth quarter of this year. So who's going to benefit? Number one is who has supply right now, and that's Advanced Micro Devices. Also, you have to assume this gives Advanced Micro Devices at least a quarter to try to continue to play catch up with NVIDIA. And then that is why the question is if NVIDIA cannot deliver Blackwell in the first quarter of next year, if it slips into Q2, heaven forbid it skips into Q3, well, all of a sudden, if Advanced Micro Devices can stay on pace with their innovation, well, all of a sudden, Advanced Micro Devices could have a product that is very much on par, which many people already think, with their MI300 product. Well, maybe this time next year, Advanced Micro Devices could surpass NVIDIA in terms of performance. This is what happens in the semiconductor industry. If you get product delays, these companies nipping at your heels all of a sudden start to surpass you. Now, Advanced Micro Devices had a rough week too, but we saw after the Intel earnings, which we'll talk about as well, and this NVIDIA news cross, shares of Advanced Micro Devices actually performed relatively well towards the last 2 trading days. Started the week at about 142.93, down about 6.3%, finished week at 132.50. Now, the company reported their earnings. We posted a video on the main channel. I'll try to put a link down in the description below. You can search the investor channel and view our entire recap of Advanced Micro Devices Q2 earnings. But the high level is $5.8 billion in revenue. That was 9% year over year. I think some of the positive things with AMD is you expanded your gross margins year over year from 46% up to 49%. And I don't think the company gave us any indication, also with this NVIDIA news crossing this weekend, that we're thinking these gross margins are going to slip anywhere south of 50%. I think you're probably going to have a Q3 where you come in north of 50%, probably low 50% on those gross margins. And that's going to be great for AMD, because here's the big thing for this company is look at the data center revenue. Last year was, I say, just $1.3 billion, and you made just $147 million. Look at this. You basically more than doubled it from $1.3 billion all the way up to $2.8 billion. It's now the biggest business over at this company, whereas this time last year, minus a slowdown in laptop sales and PC sales, this would have been the 4th biggest business at this company. Again, minus laptops and PCs, minus gaming, minus embedded, which is custom silicon. It would have been the fourth largest business. As it stood, it was the 3rd largest business. Now it has accelerated to the largest business and also the most profitable, off of $2.8 billion worth of revenue, which again more than doubled last year. Look at your operating income, up to $743 million, surpassing the embedded operating income, which continues to be very, very strong. So this company has an opportunity over the next 3 or 4 months, if they can continue on its pace, because this is how Advanced Micro Devices really kind of made its comeback, if you will. You notice back in 2017, even all the way back in 15, 14, this was a penny stock. This was a stock many thought would just simply go by the wayside, but Intel started falling on its sword, started to not release products when they promised, and so clients had to start turning to AMD, and I guess the rest is history. Now, I'm not saying that the same thing is going to happen with NVIDIA. In fact, I'm very confident that this company is going to be able to deliver their Blackwell platform in the quarter that they begin to promise to large clients, but there is that possibility that they don't, because at one time, Intel was the giant, just like NVIDIA, and we will see later what has happened to that company. Now, another company that should stand to benefit from a delay is everybody's going to be like, man, we're relying so much on NVIDIA. We're relying on them releasing their newest chips. We're relying on them, and that we're just sending them 70% gross profit margins on all the products. So what has a lot of these large companies, we'll talk about Meta, Microsoft in particular here in a moment, is what have they turned to? They've turned to custom silicon, and one of the leaders there, maybe the leader, is Broadcom. They've partnered with Google, and they've really accelerated that company's TPU, which is a version of a high-end data center chip. They've accelerated that. Other companies are knocking down the door of Broadcom after seeing the success Google has. So you have any continued delay in NVIDIA, it will turn more and more of these tech giants to saying, well, maybe we should continue aggressively promoting and producing our own custom silicon, because not only is it cheaper in the long run if you can get that program off the ground, but it's also safer from kind of a product release standpoint. Broadcom started the week at 154, like all of these stocks, down big, down 7%, finished the week at 143. When we get to the technical segment, we'll start looking at some areas where you could potentially maybe step in here and quote unquote kind of buy the dip. Now, speaking of dips, Intel, it was just an absolute disaster. Believe it or not, started the week at $31 per share. And after a disastrous quarterly earnings call, the company lost 32% of its value. I believe as well it completely got rid of its dividend, which it really should have gotten rid of maybe several months ago, maybe even years ago at this point. Shares of Intel, after being down 32%, are now down to $21.48 per share. Unfortunately, you have newbies out there that don't follow the chip sector maybe as much as you guys do. Before earnings, this was before the 32% drop. I don't think this is a troll, because he did post it, I believe, before the actual drop, is that somebody inherited $800,000 from his lovely grandma, and he bought $700,000 worth of Intel stock, which is now obviously worth about 30% less than when he bought it. Folks, a couple of things that you can learn. Number one, if you're going to buy a stock and you have $700,000 to put into it, first thing to maybe do is don't put it all in before earnings on a company that, if you look over the past, it's not like this is a one-off event for Intel. For the past 5 years, this is exactly what this company has been doing. For the past 10 years, this is what this company has been doing. It's been disappointing and having dramatic sell-offs on its earnings. I can understand putting it in a couple of bucks, because hindsight is 2020. If this thing was up 30%, you'd be feeling good. But don't put your whole wad into a stock before it puts out earnings, because Intel is a prime example of that. You can inch into these things, particularly when we're talking about $700,000. I don't know what gave this kid the bright idea that it was a good idea to take his $800K and put $700K into a very speculative stock, believe it or not, and a stock that has not been performing, other than this kid was basically not very well informed. Now, Intel reported their earnings, $12.8 billion. It was a miss. It was a decline year over year. Even more importantly for Intel is the guidance that they gave was for $12.5 and $13.5 billion. That was underneath expectations that were closer to $14.5 billion. They announced layoffs and restructuring, which again is not going to help you compete against the Qualcomms, the AMDs, certainly the NVIDIAs of the world. This company is going by the wayside. You still have a $91 billion valuation on this one. And in the past, people have pointed to the fact that this is a value stock, but now that earnings have slipped negative, this is what we call a value trap. At one time, this was probably trading in kind of the high teens, 17, 18, 19, 20 times forward earnings. But look what happens when your earnings go negative. Now you're trading at 82 times forward earnings on Intel. It's no longer a value stock. And folks, that's after the drop in shares. This is how you can't just look at price to earnings and buy based on that. I see other YouTubers. I see other people in the financial space. I see financial influencers that get paid a lot of money, and they'll point to price to earnings and they'll say, well, I'm buying it because it's a low price to earnings. Well, you have to be confident that those earnings are going to show up into the future, because if they don't, all of a sudden those earnings that you paid for when they were 17, 18, 19 times forward, all of a sudden turn into 80 times forward. This stock could potentially go bankrupt. Intel could legitimately go bankrupt. Now, another stock that I don't think could legitimately go bankrupt, but what's so interesting is that Intel is trading at 82 times forward. Well, it sure does look like Supermicro, which over the last year is up 95%, makes this look like a freaking value stock, trading just 26 times forward. Supermicro Computer not immune to the sell-off that we saw last week. Start of the week at 718, slipped under that $700 mark, down nearly 13%. I mean, you got high volatility in this one, down to about $625 per share. The reason why we bring up Supermicro is they report earnings on Tuesday. The expectations are for $5.3 billion. I don't think there's any reason to believe that this company is not going to be able to pull that off. That would be massive. 143% growth year over year. The expectations on the earnings side are going to be fantastic. $8.12 per share. Also, big time from a year-over-year growth perspective. What's going to be key with Supermicro? Couple things. They're going to be asked about Blackwell delays. This is likely going to push out some revenue that Supermicro was potentially going to be expecting. But again, NVIDIA has other products that can sell. Also, Supermicro makes custom server setups for AMD as well. So we're going to be able to get a read on that. Even if you don't invest in Supermicro, we're going to be able to pull out some quotes from their conference call because their clients are really the high-end GPU makers like NVIDIA, like AMD. We're going to get a great read on the health of those companies based on what Supermicro talks about on their conference call. So whether or not you invest in this one's going to be one that we watch closely heading into next week's show. But also something that we've got to keep a close eye on is really the Q1 guidance. You're expected about $5.5 billion. That would be about 160% growth, but that's priced in probably to the stock to a certain degree. What worries me a little bit about Supermicro, and I know some of you guys are invested in this stock, and look, it's been great. And what I would suggest, not only with Supermicro stock, but a lot of these stocks is, look, we're experiencing a correction. In this one, you're off 48% from the highs. You've got to have some stop losses. You've got to force yourself to get out of this one, only because you have so much rosy feelings as this stock is just completely rose. Well, if this continues to fall, then all of a sudden you turn into a bag holder. I don't want to see that happen. And with Supermicro, that can potentially happen because as we start to look into next year, the growth rate is going to slow down considerably. Now, we talked about how from a forward earnings perspective, you're actually not paying a huge premium for that. Also, from an EPS perspective, you're still experiencing rapid growth, but there's some question marks with Supermicro as you move into kind of the middle of next year, particularly the back half of next year. And we're probably not going to get these questions answered in this quarterly conference call, but as you move into January, February, March of next year, you're going to be wondering about that Q3, Q4 revenue. Is 53% growth rate going to be enough where you go from $5.3 billion in this quarter up, I say just to $5.9 billion? Is that going to be enough to hold the valuation on this one? Are they going to be able to fend off competition from Dell? And if NVIDIA falls on its sword and delays Blackwell even further, well, this company is basically tied at the hip to NVIDIA. So as NVIDIA goes, so will Supermicro. So it is a risky bet. Now, broad discussion here. This is an important discussion that we got to have. And we heard this week from Meta. We heard from Microsoft. We've heard from Google as well. We also heard from Amazon in terms of their earnings. And the big topic of conversation at these large mega cap companies is, guys, you are spending tens of billions of dollars a quarter on these AI data centers. And right now, not a lot of revenue is actually showing up as it relates to AI. Now, these companies are still doing a fantastic job driving profits because their core business, let's be real, their core business are absolutely fantastic. In the case of Meta, their advertising business looked great in the previous quarter. So here's what Mark Zuckerberg said on the conference call. And he says, we are planning for compute clusters and data we'll need for this next several years. You know, and that makes a lot of sense. You got to plan these things out years in advance because it obviously takes a while to spin up a data center. And he continues here and says, the amount of compute needed to train Llama 4, which is their open source large language models, very similar to like a ChatGPT or a Google's Gemini. Meta just happened to do these things in kind of an open source fashion, basically training the model, taking on the cost of that, and then releasing it out into the public. This is a very much like a Google Android approach, where Google has kind of, quote, open sourced Google Android, but then Google got a ton of benefit from other handset makers basically building on top of that. I can't directly kind of point to how Meta is going to really immediately benefit from open source large language models, but I do like what they're doing here. I do appreciate it in a lot of ways. Now, they're saying Llama 4 will likely be almost 10 times more compute than what they used to train Llama 3, and future models will continue to grow after that. So they're just saying, hey, with these large language models, they're getting, 10 times more compute power in order to train. They don't really talk about inference here, but it's probably a similar type of thing. So we got to build today for the future. And he says it's hard to predict this trend, how this will trend multiple generations out into the future. But at this point, I'd rather risk, and that's an important word, this is a risk, building capacity before it's needed rather than too late, given the long lead times for spinning up new inference projects. So he's talking about taking a risk, building out the compute now for potential, because this is not guaranteed, but potential uses in the future. Now, we got a great kind of follow-up to this, and this is kind of the question that everybody's starting to ask. Nobody was asking this a quarter or two ago. It was just, how fast are you going to grow? How great is this going to be? Now reality is setting in. And Ross Sandler of Barclays, he said, and he kind of repeats what Mark said. He said, you guys, and this is really, really key. He said, you guys said that Llama 3.1, which again is Meta's large language models, was trained on 16,000 H100, which is NVIDIA's kind of flagship GPU. He said, you also said that you're going to have 600,000 available by the end of the year. So Mark Zuckerberg was at a conference with Jensen Huang, I think it was this past week, where he confirmed that they'll have 600 a data center with 600,000 H100s. And so this analyst is starting to connect the dots. He said, hey, Llama 3 required 16,000 H100s. You said you're going to have 600,000 available by the year end. So even if we kind of go up to 160,000 GPUs for Llama 4, so he's piggybacking off Mark saying, hey, Llama 4 is going to be 10 times more than Llama 3. Well, we know Llama 3 required 16,000 H100 GPUs. And so he's 10 timesing that to 100. Now you need 160,000 GPUs to spin up Llama 4. And so now Mark says he has 600,000 GPUs. So he already has the capacity that Mark is talking about here to train Llama 4, potentially even Llama 5. Meta already has. They already have 600,000 GPUs available by year end. So we have plenty of extra capacity for interest in future products. I guess, how are you guys modeling out this kind of extra CapEx and the roadmap between training, inference, and future things? And now Mark kind of answered the question, kind of rambling, but basically saying, hey, we don't know. We have to get out in front of this. We'd rather risk building this capacity now, even though right now the company probably has enough capacity to definitely meet all of its needs and even future needs. So there's one of the risks that could continue. We talked about how all of these stocks are in kind of a deep correction mode. Even the ETFs are in correction mode in technically a bear market. And so that's the risk, as that Meta wakes up one day and said, you know what? We actually have enough. And we're going to pause, even a several quarter pause, even a 1 or 2 quarter pause on their buying of these GPUs. Well, that would put a big dent in the AI semiconductor business. Now, we also heard from Microsoft. And this was interesting. Microsoft's probably one of the few companies that has products as it relates to AI and is actively charging people for AI. So Satya Nadella, which is the CEO of Microsoft, he said, so when I think about what's happening with M65, which is Microsoft 365 Copilot, which is basically Microsoft 365, they've layered on Copilot, which is Microsoft's kind of AI version that sits there as more of an assistant. So what they've done is they're charging per head at corporations. So if you're a corporation, and let's just assume you have 100 employees, you're going to buy 100 seats to Microsoft 365. And I don't know what that's going to cost you, maybe $25, $30 a head per month. And so what Microsoft has done is said, hey, you want to have Copilot. That's going to be an extra. I think they've quoted the price. I think it's like another $30 per month. So instead of paying $30 a seat, now I'm paying $60 a seat per month. And so that is Microsoft's way to monetize their AI Copilot product. And they say, and they continue here, M365 Copilot as perhaps the best Office 365 or M365 suite they have. So kind of an opinion there, but it could be that is the best 365 that they have, and other companies have certainly recognized that. And the CEO continues, the fact that we're getting recurring customers, so customers are trying out Copilot and that they continue to pay for it. So our customers are coming back and buying more seats. So oftentimes probably what you have is Microsoft 365. You go to a CEO and he says, well, I've got 100 employees. I've got 100 seats with 365. Let me start. I've got my best employees over here, my 20 best employees. I'm going to give them 365 and see what happens. I trust these employees. They've been here a long time. They won't bullshit me. And we'll see what they say about 365. Well, what's happening is those employees are probably using it and saying, yeah, this is actually kind of useful. And so then he buys the other 60 or 70 seats for the rest of his company. Now, here was a really interesting take. He said, so GitHub Copilot, GitHub is a website that basically allows you to post code and communicate with other developers. So Microsoft bought that several years ago, and they said GitHub Copilot is now bigger than even GitHub when we bought it. So that is an incredibly bullish statement from Microsoft, that they can take an asset that they already bought, layer on a Copilot software feature, which will allow you to compile and write code. Now GitHub Copilot, just I would assume kind of the revenue from that is bigger than even when they bought GitHub originally. So that could have these companies, and I think that's probably the growth strategy for these companies going forward, is they're going to go out in the marketplace and buy these quote unquote maybe smaller websites, these other smaller type of operations, because they know they have the AI chops, they have the AI servers where they can layer on a service to it and then all of a sudden turn it profitable. And so that's potentially Microsoft strategy. They're certainly layering on Microsoft Copilot onto their 365 product. They've layered it onto GitHub. They've layered it onto a certain degree onto LinkedIn, other products, other services that Microsoft have. And so this is kind of the bull case argument for AI. Meta is playing a risky approach. I think Microsoft's is certainly more certain, and obviously Microsoft, in my opinion, continues to be a buy. Now, we've had a lot of requests. Let's look at Lam Research, ticker symbol LRCX. I believe you got a stock split coming with this one. Don't quote me on that one, but we do have a buyback and a dividend, so that's all very, very good stuff. The company started the week at $9.24, and this one was down big, down 16.7%, finished the week at $763 per share. The company reported earnings coming in at $3.9 billion. That was 20% growth rate year over year. They also gave us guidance at about $4 billion, so you're going to go sequentially from 3.9 up to 4, maybe as high as 4.4 billion dollars. The consensus was for $4 billion. So this was really solid earnings. And so you had results in Q4 and kind of the Q1 eclipse expectations, and the stock slid off the map. And so it just showed you how much was priced in. But I think this gives us hope, and not to spoil it, when we get to the technical segment of the show, we're going to be looking for areas to buy these stocks, because unlike Intel, some of these companies have been doing an absolutely fantastic job. You grew your revenues year over year, again, from 3.2 up to 3.8. Your gross margins are expanding from 45 up to 47.5. Your total operating expenses are staying relatively in check. Look, quarter over quarter, you actually drove those down from 743 down to 713. So off of this $3.9 billion in revenue, operating income coming in at $1.1 billion. Last year was south of $1 billion at $854 million. You slide down to a balance sheet on this one, it looks really good. They have plenty of cash, not a lot of long-term liabilities. This company is incredibly financially healthy. Now, one thing that did take a little bit of a hurt is kind of their operating cash flows. It looks like they had some changes in operating assets and liabilities. Those slipped from like a kind of a run rate of about $1 billion. That slipped to 862. But the good news is this company doesn't have a lot of capital expenditures, just $100 million. That's why I keep bringing things back to Intel, because it's like the disaster mode of these stocks is they have all these capital expenditures and they don't have the cash flow or the growth that the rest of these companies are putting on. So that's why I sincerely think Intel could legitimately go bankrupt. So we have this 862. We're buying back the stock. We're paying dividends. And that looks like the recipe going forward with Lam. I tell you what, get further pullback in this stock. We'll look at it technically. There's absolutely going to be some areas here. Now, small cap. You don't just tune into the show to hear us talk about NVIDIA and AMD. Everybody knows these companies. Even Intel, everybody knows that company sucks. There's some small cap companies as well. A stock that flew onto my radar around this time last year, this company called Camtek. Very small company, especially compared to the rest of these. Only $3.8 billion market cap on this one. You're trading at 31 times forward, but I'm going to show you this company is projecting still some massive growth. So what does Camtek do? They create test equipment. So when you make a semiconductor, you have to test it, because sure as hell wouldn't want to be NVIDIA and release this Blackwell. And that's kind of what NVIDIA is doing right now. They're creating kind of prototypes of Blackwell and they're testing it and they're finding out, this doesn't work, or this doesn't work, and this doesn't work. Well, so you have to do a lot of testing in the semiconductor business, and Camtek makes very specialized machine that do mainly two things. They have two specialties. Number one is they have a high bandwidth memory testing equipment, and obviously high bandwidth memory has absolutely exploded because that's what's going around these AI chips. And so that is very bullish. Whether NVIDIA is the market leader or AMD is the market leader, both are using high bandwidth memory to power their chips. So Camtek should benefit from that trend no matter who ends up on top when it comes to AI accelerators. They also make testing equipment for chiplets, which is certainly a lot of the architecture that particularly AMD, but Intel and NVIDIA eventually as well, are going to the chiplet design where you're creating a lot of little chips and kind of stacking chips on a larger die, and allows you to create these computer chips that are obviously far more advanced. Well, the company saw its stock absolutely fall off a map. It started the week up here at $107, down over 21%. Finished the week at $84. That's after the company announced their earnings, revenue coming in at $103 million. That was 40% growth, but so much of this was priced in. Like I said, this stock got on our radar last year. We recommended this to the subscribers. It ran up 100%. I would have had a really tight stop loss as we continue to move up the ladder. I'm not in charge of that portfolio anymore. My guess is they probably watched this one drop 20% this week and didn't do anything. Cash and cash equivalents, we'll see, is big time over this company. They got $460 million. And again, I'm talking about a $3 billion company. They have $460 million in cash, not a ton of liabilities. Here's even more important than that. They gave you third quarter guidance, 107 to 110. This was a beat and a raise. Consensus estimate was for 103. Wall Street still trying to catch up to this. And look at the CEO's comments. CEOs don't like to put this stuff out there because then they're held to this. And if they don't meet it, then they can often lose their job. But this guy's willing to say they're well on their way to annual sales in excess of $500 million. This is a company that just closed a 2023 where they did $315 million. For the first 6 months of this year, they've done about $200 million. So they're on kind of a $400 million run rate pace. And so, like I said, the CEO says they're well on their way, maybe potentially next year, going to $500 million. Company is also profitable from an operating income perspective, a net income perspective. When you look at the balance sheet, the company has a fair amount of cash, again, based on the size company that we're looking at, and they have very few liabilities, not a ton of long-term liabilities. From a cash flow perspective, everything looks pretty solid for this company. We get further pullbacks. I'm not asking you, and I'm not telling you to run out and go and buy this stock. I would wait for some reversals, some footings. We'll look at this technically as well. Just wait on this one, but this is one you have in your back pocket because you're going to have exposure to NVIDIA, Supermicro, AMD, maybe even you buy the dip on Intel for some reason. Well, here's another kind of smaller company that certainly benefits from what we're seeing. Now, speaking of benefiting, is Qualcomm. Over the past 5 days, the shares started at 181, down 11.5%, finished the week at 159. Qualcomm also reported their earnings this week. These were Q3 earnings, $9.4 billion in revenue. That was 11.3% growth year over year. They also gave us guidance for the Q4, 9.5 up to $10.3 billion. The consensus was for 9.7. So you're seeing kind of beat and raise and getting kicked to the curb by Wall Street. That's exciting for me. That's very, very exciting. You continue to get beaten down by Wall Street. Well, eventually these results start to catch up. With Qualcomm, it's just a fantastic business, as probably many of you guys know. $9.4 billion in revenue, $7.2 billion in cost. Operating income coming in at $2.2 billion. This is a company also with large amounts of cash flow, $9.5 billion over the past, this is a 9-month cash flow number, $9.5 billion. Not a lot of capital expenditures, just $785 million. So what does it do? This $9.5 billion in cash gives these companies a lot of room to buy back the stock, continue to pay dividends, continue to grow the dividends. Though both of those things, particularly the share buyback, should create some support underneath these shares, which again, over the past 5 days, really over the last month, have continued to move down. Now, another company that reported earnings this week, ARM Holdings, a newer company, one that has gone public just in the past year, saw shares fall off a cliff. 147 down 24%. Finished the week at 113. You're going to want to look at this technically. Revenue grew 40% year over year to 940. They also gave guidance revenue between 780 to 830 million, although this is a $118 billion company. So this is a company that's going to have to continue to grow into their valuation. Now, they're still growing 40% year over year on that revenue side. So that's a strong way to do it. The expectations for revenue in the Q2, which is the upcoming quarter, was for about 813, and the 780 to 830 certainly disappointed people because on the low end, you're coming actually kind of underneath what expectations were. Now, the company is a royalty company. They create a chip design or an architecture, if you will, and then they license it to companies like Apple and others. And it goes into almost every single mobile phone, a lot of laptops these days. It's also making its way into the data center. There's a lot of Internet of Things or IoT applications. And they have a version 9 of their architecture, and they're just showing you here kind of the progression. It's this dark blue line, and what they're trying to point out is ARM version 9 has a higher royalty rate. So as more and more companies adopt the version 9, they should theoretically generate more and more revenue and more profits. Like we said, revenue came in at that $940 million. It was $675 million last year. This is what's so awesome about ARM, and this is why it has this high valuation, is look at your total cost of sales. Off of nearly $1 billion in revenue, these are in millions. So this is just $33 million. So off of $940 million in sales, you have $906 million in gross profit. So like some of the highest gross margins you'll ever see in your life. Now you still have to spend money on research and development, $485 million, selling, general administrative, $240, total operating expenses coming in at $724. So off of that nearly $1 billion in revenue, you earned $182 or $182 million. Last year, it was $111 million. So if you believe in the growth rate of ARM, the adoption of ARM, and potentially with Intel falling on its face, that's certainly good for ARM as well. Well, these revenues should continue to accelerate. If they continue to accelerate, this is a mega high margin business. And, there should be some good days to come for ARM. Now, speaking of good days, semiconductor industry has seen some good days, particularly over the past couple of years. We'll start with the SOXX, the SOXX semiconductor ETF from the highs. These are approximate. We are down about 22%, but you're seeing here, maybe I'll change this to a weekly view. It gives us an even kind of better view of what we're looking at. Here's like a 15-year chart of the SOXX. I mean, we're still way over and above what I would consider trend, which is this green line. So yes, we are in correction. And yes, the semiconductor index goes on these deep corrections. Look, from December 2021 to October 2022. I mean, that's a quick drop. That's like a 9, 10, 12-month drop on this one. You were down 47%. We've gone on similar drops. This was partly related to COVID, but you went on like a 37% drop there. Other times you've seen this index drop 20, 30%. So this drop that we've seen more recently after the massive run up that shares of this ETF have been on, I mean, it's up 172% since the lows of October 22. You are due for a pullback. Some could potentially say we are still in this steep uptrend. If you believe that this steep uptrend is intact, well, here you guys are on the SOXX. This is probably technically a buy heading into next week. Similar type of view with the SMH. I actually divide the SMH in half. I've got this light green line in here. If you don't know the coloring of my line, there is some method to that magic. When you're up here at the top of the channel on these red lines, this is a sell. This is not an area where I'd like to accumulate these ETFs. Certainly you don't want to be like that kid that bought $700,000 worth of Intel in his $800,000 account. Don't be like that kid. Don't accumulate stocks at the top. We've seen a pullback in the SMH ETF. What I like to do is I like to divide these in half because you do occasionally see some accumulation in the middle of the channel. Now, if I was this kid and I had $800,000 and I was going to put it in the SMH, I would put a very small amount. We're probably talking about maybe $70,000. So 10% of my money, I would maybe start it at the middle of the channel. Because if we can continue to go down on this one, we're going to have a pretty big pullback. It's at these dark green lines, which again, you see over the past 10 years. This is a weekly chart of the SMH. Anytime you've approached the bottom of this channel, this dark green line, this has been your time to move. And right now we're heading towards that area. So you've got a chance to move. Now, NVIDIA also illustrates the fact that, yes, shares of NVIDIA over the past month or so are down about 23%. But when you expand this out to a broader view, you still see that you're way, way, way overextended on this one. In fact, NVIDIA would have to drop another 20-30% to get to a 50% drop peak to trough, just to get us back to the middle of the trend. Back all the way to the bottom of the trend is near 70% drop on this one. So you've got some downside risk with NVIDIA. I still wouldn't be running out and buying this stock. Further pullbacks in NVIDIA, though, I think should be aggressively bought. Now, AMD was a stock I actually bought multiple times this week. I actually bought it and sold it, and that's what I'm doing in these volatile times. I'm buying stocks, and look, if they pop the next day, as the case with AMD, they pop 4 or 5%, I'm just going to take my money out because, man, these things are volatile, and I think your risk is not shooting all the way back to the upside, making higher highs like in 2 or 3 weeks. I actually think the risk is probably to the downside on these ones. So I'm taking and harvesting money. AMD bounced off this technical support level, which I'll extend this back to a weekly view. Again, this green line, it's not really perfectly technically, but we've been hugging this line more recently. You've got overhead resistance at AMD at about 163. So your upside is back into resistance where sellers have emerged. Your downside is probably back well below 100 on this one. So I've been harvesting profits, but technically AMD is in a buying area. Now, Broadcom looks almost identical to NVIDIA, although its technical chart pattern is even cleaner. Now, the stock has really only been public in its form since 2010, but you've got a 14-year uptrend here, and here we are. Again, yes, we were off 21% from the highs on Broadcom, but from this view, you are still way, way overextended up here. We'll wait for clear days with Broadcom. Now, Broadcom reports their earnings very similar date as NVIDIA, 25 days from now. NVIDIA is 24 days from now, so you better believe that'll be a big week. Now, speaking of big, look at Intel. From the highs, it's almost not even worth it, but back in March of 2021, you're up at $63. Now you're down 66% on Intel. You are approaching an area where there should be some footing on this one. So if you like some shorter term money, Intel is probably going to put it out. There should be some support down here at about $19. I'm sure there's going to be people that rally behind this one and said, hey, they're going to turn it around. They're going to lay off enough workers. They're going to cut the dividend and those types of things. I don't like to play that game. I think the risk is this one goes the way of BlackBerry and Nokia, that the days of this company have just simply passed it by. But technically, from a price perspective, you should see a bounce in Intel in the coming days. We've got Qualcomm, which, like we said, reported their earnings this week, down 31% from the highs. You've got a really nice trend line underneath shares, really since 2003. I would say you probably have a secondary trend which emerges for the company somewhere in this range. So you get a full other pullback in this one south of 150, which we're close. We're at 159 on Qualcomm. I think there's buying opportunities here. Here's the company that if you continue to see a downward trend on this one, this company wins really no matter what. They have obviously strong footing, not only in AI data centers, but PCs, cell phones, pretty much everything. You're down 22% from the highs on TSM. You've got a clear uptrend, which has really emerged since 2008. Further pullbacks on this one. You've got a secondary trend that probably is another 30 or 40% lower, at least from a steep perspective. Get anywhere south of, I would say, 145 on TSM, and we're at 150 on this one. That's where you nibble. Again, don't be like this kid that dumped his whole account all in Intel on a single day. Do it. Trading fees are zero now. So just very, very lightly, incrementally go into these stocks. There's no reason to put your wad in and YOLO these things all in one day. Now, ASML, another company, down big time, 27% from its highs. We are approaching, again, what I call kind of the middle of the channel, these light green lines. These aren't drawn in here perfectly. It just is to give you an idea on where you can start accumulation. I think ASML, you can probably start accumulating that one as soon as next week. NXPI is very close. We are down 19% from the highs. We've got a very clear trend that has been intact since 2011. You get further pullbacks in NXPI, probably anywhere south of 220. That is a buying opportunity. ARM Holdings hasn't been public for very long, so we don't have a lot of data. The company is also managing its Wall Street expectations. So here's what I like to do. I'm going to show you a little trick. You got these indicators, and you're going to go to a fixed range volume profile. So what this is going to show you is once you snap this on the price chart, it's going to show you where people are accumulating ARM holdings, and this is a little worrisome. So this volume on the side is basically just giving you this volume that usually appears on the bottom of people charts. It's showing you where the accumulation, where the high volume was. And you see here with ARM, the vast majority of accumulation was at 126. So the company is going to be on decision day. I'll take off this volume profile. Well, I'll leave it on for a moment because here's the risk. Is basically nobody bought ARM stock from about 70 to up to, we'll call it about 100, 105, about where the stock is right now. So if you start moving into this area, there was no accumulation in the past in this stock. So what tends to happen is you slice right through that and go to the next area of obvious support, which is all the way down here at 75. So you could have a big move down with ARM. The other thing that is potentially possible is the accumulation area at 125. I mean, if you liked ARM at 125, and a lot of people liked ARM at 125, where you're going to like it a lot more at 113. So it can create kind of a magnet back to that level. That's what we're going to be watching with ARM. There is a level here. Let me take off this green line, and I'm going to change this green line to purple since there's not a lot of colors on here. So this purple line is a trend line that ARM holding has been holding on. If you switch this even to a daily view, you can see that that's been holding. Now we've gapped and closed below it, so I'm not confident at all. We've got a gap in the chart, which is not completely filled. I think the risk is you're back down here to 78 on this one, and certainly if it goes to 78, that is going to be a stock we're going to be wildly recommending. Now, moving over to SMCI from the highs. Oh my goodness, hopefully you didn't buy this one at the highs. You're down 49% on this one. And I'm assuming with a volume profile on SMCI, you're going to see something pretty ugly here. And then, yeah, you are underneath support on this one, and nobody, and you can see just very few candles between, call it 300 and 600 on this stock. That is what's so scary about a stock like this, is your next support level here is at $250. I posted a video on the investor channel that said this is like $150 stock. A lot of that had to do with technicals. Yes, you have some accumulation up here, but my guess is this is a lot of retail. This is not a lot of institutional accumulation up here. This is retail saying, oh, SMC is hot, I'm going to buy it. And now here we go. Now the company reports their earnings again on Tuesday. We'll see which way it goes, but I think your risk is more to the downside rather than create some new higher high in the short term. Also tied to the hip to NVIDIA, which is seeing product delays, probably also not good. Now, a poor man's SMCI is Dell Computer. From the highs, this thing is down 42%. Not a lot of data, as they've only been public in its current form since 2019. We were on this steep uptrend. We have convincingly kind of closed below that. I think you're looking at areas much, much lower on Dell Computer that makes sense. Probably down into the 50s on that one, believe it or not. Now, another buying opportunity that you might potentially have is Micron. Talked about this one when the company reported their earnings. Here you are at the middle of the channel. Again, we're not going to be like the kid that unloaded his whole his grandma's entire wad into Intel stock. But here's an area where if you wanted $100 into Micron stock, I think you buy about $10 at this range, because historically over the past several years, really over the last decade, you've seen accumulation in that area. And then we're looking at Lam Research. This one also getting close to a buying opportunity, at least in the shorter term. Further pullbacks in Lam Research, I think, can be bought. And then finally, you have Applied Materials also on has kind of more recently made a very steep uptrend. I think we're still over and above that to where I'd be confident in this one. You also have a lot of sideways consolidation. Oh my God, can't believe I'm going to say this. You have sideways consolidation on this one in the $12 range. If you snap on a volume profile, and I know a lot of these people are not really even in the stock anymore, but something like this is probably not going to be, this is going to look really ugly. So the accumulation on this stock is much, much lower, which gives you some reason to believe that potentially not a bunch of sellers emerge up here, because people have at least long-term holders have such a low cost basis on this one. So even as the stocks drift lower, they have a lot of gains. Folks, speaking of lower, the semiconductor industry, massive sell-off this week. It's a big week next week. We'll see how NVIDIA handles the fact that they had a delay in their product announcements. How will AMD stock react to this, as this is one of the beneficiaries of that company having delays? Also, Broadcom as well. Will Intel stock bounce back a little bit next week? I have to imagine it will, but long term, what is outlook for Intel going to look like? Folks, that was the semiconductor stock here on Equity Empire. We've got more planned this week. I've got new shows coming. Thanks for tuning in. Hit that like button, that subscribe button. There's links to follow me on Instagram, Twitter, and other avenues below. I'd love to see you over there. Until next time, have a great weekend and good luck with your investments.